The silver market is undergoing a transformation that is no longer subtle, no longer theoretical, and no longer ignorable. What we are witnessing is a full-scale repricing event driven not by emotion or speculation, but by mathematics, supply constraints, and the accelerating demands of a world electrifying faster than anyone predicted. When markets evolve at this speed, the greatest risk is not acting too early, it's recognizing the truth only after the window has closed. Silver has always been misunderstood. People tend to view it through the lens of the past, coins, jewelry, a hedge during chaotic times. But what's happening today is fundamentally different. Silver has become a critical technology metal, the kind that sits at the intersection of energy, industry, and exponential innovation. When you electrify transportation, expand solar farms globally, scale data centers, advance artificial intelligence, strengthen medical technologies, and build out 5G networks, you inevitably increase silver demand. These are not cyclical trends. These are multi-decade transformations. The repricing began the moment supply stopped matching demand. For years, global silver inventories were quietly drawn down. Mining output remained stagnant because silver is often a byproduct metal, meaning you don't increase silver production unless you also increase copper, zinc, or lead production. That built-in constraint created a structural mismatch that the market ignored until now. Industrial users have finally collided with investment demand, and the result is the kind of disruption that markets only recognize after the data becomes undeniable. Price action is simply the last step in the story. The real story lies in fundamentals, the deficits that have become annual, the warehouse stocks that continue shrinking, the refiners struggling to keep up, and the long-term contracts being renegotiated at higher prices because future supply is no longer guaranteed. Silver is transitioning from an undervalued commodity to a strategic asset, and strategic assets do not stay mispriced for long. The world is building infrastructure that consumes silver relentlessly. Solar manufacturing alone is rewriting demand forecasts. Electric vehicles require significantly more silver than traditional cars. Semiconductor manufacturing, the backbone of AI and data expansion, requires consistent silver flow to maintain throughput. Even military applications, medical technologies, and high-end electronics are increasing their dependence on high-purity silver. When multiple industries draw from the same limited pool, a repricing is inevitable. What makes this moment urgent is not the price today, it's the acceleration curve. Markets are backward, looking by design. They price assets based on what the world used to be, and only later adjust when reality becomes too large to ignore. Silver is reaching that inflection point now. Investors who wait for confirmation will discover that confirmation always arrives at a premium. Disruption rarely announces itself politely. It speaks through supply imbalances, through rising lease rates, through frantic purchasing by industries that cannot operate without this metal. And while other assets may fluctuate with sentiment, silver is being driven by necessity. The world cannot scale renewable energy without it. We cannot expand digital infrastructure without it. We cannot pivot into the next phase of industrialization without it. This is the kind of shift that rewards those who understand exponential trajectories, those who can see that value does not move in a straight line, but in surges, resets, and repricings. If the world is truly entering an era of mass electrification, technological acceleration, and renewable transition, then silver is not just participating in that trend, it is powering it. And when the backbone of global innovation is underpriced, markets eventually respond with force. The repricing has already begun. The only question now is who recognizes it in time. The silver market is entering a phase that very few investors are prepared for, not because the signals were hidden, but because the assumptions about silver were outdated. For years, the world treated silver as a secondary asset, a metal of tradition, a hedge for uncertain times, a historical companion to gold. But what we are witnessing now is a fundamental rewiring of silver's role in the global economy. This is not a commodity reacting to short-term speculation. This is a resource being revalued by technology, energy transitions, and structural supply pressure. The shock is not that silver is rising, the shock is how dramatically the world mispriced it for so long. Silver sits quietly at the center of multiple exponential technologies. When industries move from linear growth to exponential adoption, their demand for critical materials doesn't double, it multiplies. Solar energy is scaling globally at a pace no one forecasted a decade ago, and silver remains a non-substitutable component in photovoltaic cells. Electric vehicles are not only accelerating in adoption, but are also increasing in technological complexity, and each new generation requires more silver than the one before. Semiconductors, the hardware backbone supporting AI, data centers, and automation, rely on silver's unmatched conductivity. Even the expansion of 5G networks and advanced medical technologies amplifies silver demand. These are not cycles that turn on and off. They are compounding trends that collide directly with a limited and slow-growing supply base. The repricing event is emerging because the market no longer has the luxury of ignoring structural deficits. Silver production is constrained by geology and mining economics. You cannot simply flip a switch to create more silver because most of it is produced as a byproduct of other base metals. When global silver demand surges, mining does not automatically respond. This inelasticity is one of the most overlooked catalysts driving the recalibration now unfolding. Inventories have quietly tightened. Industrial users are competing for contracts at higher premiums, and investment demand is awakening as people begin to realize that this metal is crossing the threshold from undervalued to indispensable. What investors are not ready for is the speed of this adjustment. Markets often overvalue what is popular and undervalue what is essential. Silver is essential. As energy systems transition from fossil-based to electrified, the world becomes more dependent on conductivity, efficiency, and materials that support renewable power generation. Silver does not merely participate in this transformation, it enables it. Without silver, solar would stall, electronics would slow, and electric vehicles would become dramatically less efficient. When a material becomes mission critical to multiple industries simultaneously, its price eventually reflects its true utility rather than its outdated reputation. The real shock of 2025 is not the price movement itself, but the realization that this repricing was inevitable. Investors accustomed to gradual, predictable changes are now confronted with a metal whose value is being pulled upward by forces far larger than traditional speculative cycles. Industrial leaders, manufacturers, and forward-thinking investors are preparing for a world where silver is no longer cheap, abundant, or secondary. They understand that technology-driven demand curves do not wait for consensus. They accelerate relentlessly, and prices adjust violently when supply cannot keep up. The extraordinary part is that this repricing is still in its early stages. Most of the world has not connected the dots between energy transitions, AI-driven infrastructure, electrification, and the materials that make those systems operational. The disconnect between perception and reality is widening, and silver sits right in the middle of that gap. When perception finally catches up, the shock will not be that silver rallied, it will be that it was undervalued for so long despite all the signals pointing to a structural transformation. This moment favors those who think in exponential terms, who understand that technological revolutions do not coexist with old pricing models. A mispriced asset tied to the most critical innovations of the century is one of the rarest opportunities markets ever offer. Silver is undergoing that recalibration now. The repricing event has begun, and the world is only just starting to wake up to its scale. Silver has officially crossed a threshold that marks the beginning of a completely new price era, and this shift is not being driven by speculation or hype, It is being powered by mechanics far deeper, far more structural, and far more transformative than the market has been willing to acknowledge. What we are witnessing right now is a repricing event that reflects a world rapidly reorganizing itself around electrification, digital infrastructure, and renewable technologies. Silver is no longer simply a precious metal. It has become a foundational input for the systems defining the future economy. For years, silver lived in the shadow of gold, viewed as the cheaper alternative. A hedge for uncertain times, an afterthought in the commodity landscape. Yet beneath that outdated perception, supply constraints were quietly worsening while industrial demand was accelerating. This year, those forces have collided, and when structural deficits meet exponential demand curves, markets do not adjust slowly, they reprice aggressively. What's happening now is not reactive, it is corrective. The market is finally aligning silver's value with its real-world utility. A new era of pricing emerges when old assumptions break. For silver, the biggest assumption was that industrial consumption would remain steady, predictable, and modest. That is no longer the case. Solar power, the fastest growing energy technology on Earth, is consuming silver at unprecedented levels. Each new solar installation locks in long-term silver demand that cannot be substituted easily or cheaply. Electric vehicles have become rolling ecosystems of advanced electronics, each requiring significantly more silver than traditional automobiles. And semiconductors, the essential building blocks of AI, automation, and cloud computing, rely on silver's unparalleled conductivity. These industries are not slowing down. They're scaling in ways that rewrite demand models entirely. Silver's repricing is also fueled by the reality that supply cannot keep up. Unlike commodities with flexible production, silver cannot be mined on demand. Because most silver is a byproduct of other metals, its supply is tied to the economics of copper, zinc, and lead, not silver itself. Even as prices rise, mining companies cannot dramatically increase output. This creates a structural imbalance. Demand grows exponentially while supply remains stubbornly fixed. That imbalance becomes the spark for a new price era. Investors are beginning to recognize the disconnect. For decades, silver was priced as though the world would remain technologically slow and industrially stable. But now the global economy is being rebuilt around data consumption, electrification, renewable energy, and high-efficiency electronics. These systems cannot function without silver. When an asset becomes mission-critical to multiple industries simultaneously, markets have no choice but to revalue it. The repricing is also driven by macroeconomic forces. Inflationary pressures, currency instability, and rising geopolitical friction have pushed investors back toward hard assets, but this time, silver is not merely a safe haven, it is also a growth commodity. That dual identity makes it uniquely positioned in a way no other metal can replicate. Gold may protect wealth, but silver protects and powers the infrastructure of the next industrial era. That distinction matters. What many still underestimate is how early this repricing is. Markets typically lag behind technological realities. They respond only when data becomes impossible to ignore. Today, the data is overwhelming. Shrinking inventories, rising industrial consumption, tightening supply chains, and aggressive long-term purchasing from manufacturers who understand what's coming next. These are the conditions that mark the beginning of a new multi-year pricing cycle. Silver has entered a new era because the world has entered a new era, one defined by electrification, innovation, decentralization, and rapid technological growth. As these systems expand, silver's role becomes not only central but indispensable, and when a metal becomes indispensable, the market rewrites its price story entirely. The repricing is live, the shift is real. And this is only the beginning. The silver market has just cracked wide open, and the repricing is unfolding in real time. What's going on is no fleeting rally or hype-driven pump. This is structural, deep, and rooted in reality. Supply is tight, demand is surging, and silver is being redefined in the global economy. For years, silver was sidelined, treated as a secondary metal, an afterthought. But beneath complacent assumptions, a supply squeeze has been accumulating. In 2025, the Silver Institute projects that global supply still falls short of consumption, extending what is now a multi-year structural deficit. The Silver Institute +2, the Silver Institute +2, the red flag isn't just a single year's date, it's a pattern. Demand from industrial sectors, especially solar energy, electronics, electric vehicles, and renewable infrastructure, is at record levels. Crux Investor +2, the Silver Mountain. NL +2, the nature of this deficit is crucial. Around 70% of silver is mined as a byproduct of other metals, copper, zinc, lead, not because silver itself is suddenly needed more. That means when silver demand surges, supply cannot rapidly expand in response. Production lags, output remains constrained. Gold silver +2 Reuters +2 add to that shrinking above ground inventories and rising physical constraints in refiners and warehouses globally, and you have what looks like a textbook material squeeze. Physical gold +2 discovery alert +2, this is not speculation, this is necessity. Industries building solar panels, expanding EV fleets, scaling data centers and solar farms, rolling out 5G networks, and deploying advanced electronics all rely on silver's unique physical properties. As those technological revolutions accelerate, silver isn't optional, it is indispensable. CME Group +2, the Silver Mountain. NL +2, and so the market has begun to catch up. In 2025, silver prices surged, climbing past key thresholds, reaching levels not seen in decades. Trading Economics +2 Forbes +2, what many assumed was a cheap metal, is now being repriced in real time to reflect its true role, not just as a precious metal or hedge, but as a foundational material of a rapidly evolving global economy. European Business Magazine +2 EBC Financial Group +2, the shock to many investors is that this shift isn't gradual, it's happening now, and it's accelerating. When demand growth compounds and supply remains rigid, prices don't drift upward gently, they jump. Industries desperate for supply, refiners struggling to source metal, shrinking inventories, these create a pressure valve that bursts. The result is dramatic price moves, sometimes violent, as the market tries to recalibrate. This isn't about sentiment, it's about fundamentals, and fundamentals don't lie. What's unfolding is a material reset in the value of silver, a reset driven by industrial transformation, energy transition, technological demand, and structural scarcity. If you're watching this market with the mindset of the past, you'll miss the magnitude of what's occurring. If you're looking at silver as a relic or a minor commodity, you'll underestimate the scale of its role in the century to come. Because, make no mistake, silver just broke, and the repricing is already live.